There's 5 waiting right now. We're trying to go live on YouTube.
It says live up the top of the screen.
Yeah, I'm not showing up on YouTube though. 6 are watching. Wait, so 6 people are watching. Hello, everybody. Hello, everyone. Just trying to make sure we got everything running properly. So whoever is here, please just check in, say hello. Anyone at the comments? Let's see. I don't see anyone showing up. I mean, showing up in the comments area. Okay, so we have Andrew. Hello, Andrew. How you doing? Can you hear me okay? Test 1, 2, test 1, 2. Frank, can you see the comments over there?
I just keyed in, please check in, and can you see the slides?
Okay.
And nobody's responded, so.
You know why? Because you probably are on the, are you on the private?
Oh, yeah. Yeah, I am.
That's okay. Just click on the other one. Hi, Andrew. Hey, Todd. How you doing?
There you go.
You can. Okay, great. Welcome, people. Welcome, guys. We're going to wait to see if anyone else shows up in the next couple of minutes. It says 7 are watching. I don't see 7 people inside the channel, but that's fine. Maybe they're able to do it, see it a different way. Not sure. But anyway, we're going to be getting started in about 2 to 3 minutes, just waiting for maybe some late arrivals. Everything should be self-explanatory as we go through the slides. If you want to write down notes for a question or something, go right ahead. You can even post questions. We'll take questions at the end. Frank will be looking at them and monitoring them for if they can be given quick one sentence responses. If not, we'll go through some of the questions at the end. And that's about it. It's pretty straightforward. Some of the stuff is redundant for you, some of you more experienced traders. Well, I shouldn't say redundant. It's all going to be new because it's a method that I've come up with over the past 27 years of how to trade earnings. But the concepts we're going to be talking about, like calls and puts and some of the strategies, are probably familiar with you. We'll talk about some of the setups, how I go about figuring out what type of setup is the best one for this particular trade, and how a stock even makes it in to the running to be an earnings trade. So we'll answer all those questions. Now, if you're already a member of my Discord, you won't want to stick around to the end because it's just an offer for them, for people that would like to maybe come on board and trade them with us in the earnings package. It's just for the earnings package. But like Todd, you're already a member of the highest level, which you get that included with your package already. But you're still, stick around anyway because you're still going to learn a lot about, what I'm here to talk about. But if you see the offer at the end, it doesn't pertain to, let's say, members that are current, because most of the time, most of the members are already at the highest membership level, which gets you access to everything. Everything that we do, the futures, the unusual options activity, the earnings, the spec trades, everything else. So you're not getting shafted here by the offer that we're going to make, for the earnings trading. But by all means, the learning area you should stick around for. And stuff. All right, so see there's 8 people watching. I only see Andrew and Todd. I wonder how that works. Where they're not in the they're not showing up. Maybe they're just not responding, but they're able to see. But you know what? Let me just do a test. If anyone wouldn't mind, there's about 7 or 8 of you watching. There's only 2 people typing comments. Can someone just give a thumbs up? Just let me know that at least there's other people that are able to see and hear other than just Todd and Andrew. Andrew, if you don't mind me asking you, how did you hear about tonight's event? Frank, you hear me okay, right?
Yeah, yeah.
Okay.
From TJ. And I guess Andrew was also on the webinar that you guys did the other day of the session.
I got you. I thought you said TJ showed up. Oh,
Oh,
okay,
no.
from Andrew. Okay.
Yeah,
I
from
mean,
Andrew.
from TJ. Okay, great, Andrew. Good. I'm happy that you caught that segment with TJ. We do that usually on Tuesdays if time permits, and we usually go over some stuff that we're both looking at, or we'll go over something that's in his account so that we can give him a little insight into his positions. But okay, all right, let's get started. And there are 8 people watching. Don't know why they're not able to. You know what? I'm gonna do just in case I don't know how they're able to watch it if I don't see them. Maybe because they're not just commenting.
That's probably it.
Okay. All right. Either way, let's get started. All right. So I'm Uzi. My first name is Jim, and Option Selling Institute is the Discord that I run 5 days a week. And I don't sleep at night because I sometimes get texts from members at 2 in the morning, 3 in the morning because they have questions. Because there's members all throughout the world. I have people in Germany. I have people in Australia. We have people from all over the world. So their time zones are not my time zone, right? So I could be sleeping and I get questions from members. Now, I don't always pick up my phone and reply, but I work all the time. And I like to have a family-like setting in my Discord because, I have a motto, no traders left behind, because we're all in the trades together and we all want to make money together. So with that said, let's get into tonight's talk though, which is about earnings. Okay, but thank you all for attending. Now, tonight's goal is to share with you the proven method that I've come up with to take advantage of trade setups using earnings as the catalyst. Now, we know that earnings occur 4 times a year. So there's 4 earnings seasons, and they run about 6 to 8 weeks. Okay, but there's usually a very heavy concentration of earnings trades within about a 4 to 5 week period, where the big companies that we really want to, the meat and the potatoes that we really want to focus on, because those are the companies that, they're everyday names that if we do put a position on and we do get a little bit challenged in it, which doesn't happen all the time, but if we do, we want to know that we're dealing with a good sound company like a UPS, like an Abercrombie and Fitch, like a Dollar Tree, like Tesla, Google, the good big names. We don't want to be trading earnings on stocks that if you get assigned or if you have an issue with the trade, that it's hard to roll it or it's hard to get filled because you have an illiquid option. Okay, and that's really important. So I've been developing, my different strategies since 1998. I went full-time trading in 1998. Before that, I was trading on a part-time basis from my work situation where I was running a small business. But yeah, this has been years in the making, and I fine-tuned it until what we have today. And it's been proven because I've been using it now for years. And as Frank will attest, he's been with me now. He's a senior member. By the way, Frank's a senior member of my Discord. He's been with me now for a year, and he's got a lot of trading history and time under his belt as well. He's traded as early back as the late 80s. So I'm trading a long time. Frank's trading a long time. Between the two of us, we got probably 75 years under our belt combined. So we've seen it all, and we know how to navigate the markets. And but earnings is where I do specialize. I don't know if anyone else out there in the trading world that really has a focus on earnings. They'll dabble in earnings. They'll gamble on earnings. They'll buy calls. They'll buy puts. It's almost like for them a betting on a game. And you know what? That's fine. But what I do is I take the gamble out of it, so that if you want to try to make a living, I shouldn't say make a living. If you want to try to get extra income to whatever you're already doing, you can. And you can do it with a risk averse trades with different methods and different strategies that they sound scary. They sound hard. They're not. Every option strategy that I use or anyone else uses is just a simple combination of calls and puts. It's really all it is. It's calls and puts. It's how you put them together. So if you're going to do a puzzle, right, it's how you put that puzzle together that makes it work or not work. So yeah, if you're good with building Legos, if you're good with doing puzzles, when you put these together, the combination of calls and puts, you come out with different strategies. Jade Lizard, Iron Condor, Strangle, Straddle, you name it. There's so many different ones, and they're not really that hard. And we explain them in the room if you have questions. Okay, So I started this a little bit before, but I've been trading since the 90s. Went full time in 98. I was self-educated, self-taught. Back then, we didn't have internet. We didn't have trading rooms. We didn't have Google. We didn't have anything to quickly access. We didn't even have fast internet. We had, well, we didn't. We had beyond. We were beyond dial-up, but we didn't have the fast systems we have now. Sometimes you weren't sure if you got filled, and you had to call your broker and make sure that they get filled on this order. So we've come a long way. Now you can press your mouse and you're filled in an instant. I didn't have the ability to look up charts and Google stuff and look back 10 years on charts because we had internet, but we didn't have it like we have now. So I spent a lot of time in books, in the library, buying books online. Back then it was Amazon. If you wanted to buy a book, you went to Amazon. That's all they sold. Amazon only sold books, and that's where you went. And now look at Amazon. So I've seen, and Frank has seen, I mean, just from that stock alone, the changes that have gone on in the world. But so let me fast forward. You know, I did self-educate, and I learned by making trades, placing trades, managing those trades, losing trades, winning trades, and documenting everything, so that I had, you know, something to lean back on, so that I could try to stay in the game. And I have. I stayed in the game full time since back then. All right, let's get into some fun stuff. Enough about me. Enough about Frank. So I'm going to show you a couple charts, and I just want you to yourself, well, you know what? Let's get interactive in the chat section. Hey, what's up, Snowball? Nice to have you here, man. This chart, this is a chart of United Healthcare. Does this look like the potential that this had 3 bad earnings seasons? Is that possible? Maybe. That's what it looks like, right? Let's look at this chart. This is CrowdStrike. Does this look like it was potentially a bad earnings announcement? Maybe, right? Well, how about this one? This is Hims and Hers. Was this maybe a bad earnings report? The answer to all 3 is no. What this was what's called a binary event, meaning a one-off. Something happened, which was news that came out overnight or at the close of the trading day, which was negative news on the stock. So the people that say that earnings trades are gambling versus just buying and holding, whether it's stock or options or whatever, leaps, whatever the instrument is, there are people, and I'm not trying to get like angry or something, but there are people that say earnings is gambling. I don't care what you tell me, it's earnings or gambles. Well, how about waking up to Hims and Hers on this huge fall? Or waking up to a good name like CrowdStrike, which is a leader in this industry. This was not earnings. This was on, here it is right here, faulty software update in its Falcon sensor product sent the stock down from 380 down to 200. And this next chart was United Healthcare. They cut their 2025 earnings forecast, and they reported higher than expected healthcare utilization costs, particularly with Medicare Advantage plans. They had 3 instances, one of which I have to say was an earnings issue, but there were 2 out of 3 which had nothing to do with earnings, and the stocks got cremated. So what I'm trying to illustrate is something simple. To be honest with you, it's pretty fair to say that earnings are not any more dangerous than simply owning positions in stocks. I'd actually argue to say trading earnings is safer, because we know that on such and such date that let's say Google is going to have their earnings, and because leading up to that, the implied volatility is already elevated. We know that day when we put that trade on, and by the way, we only put our earnings trades on that same day, is that, thank you, Snowball, I just saw your post. I appreciate that, man. You know the earnings event's coming. You know you are going to potentially see a dramatic move in price, or maybe not, but you know you're getting ready for it. You're already forewarned. It's like knowing the hurricane's coming. You have time to prepare for it. You can batten down the hatches. We know the implied volatility is elevated. We are pricing our position into that, knowing that, number one, after the earnings announcement comes out and we know now all of the secrets are known, whether it's good or bad earnings, we know that the implied volatility is going to experience a dramatic change, and it's going to drop, because now the market makers which had priced in the worst thing that could happen, and even if it is terrible news, now the news is out, so it's not so terrible. Now they start to contract that volatility, and so what we just sold, and most of the times we are selling options when we trade earnings. what we've sold just dropped, just from the earnings crush, we dropped 20 to 30% overnight, or by the end of the, or after the close of the market. But by the next trading day, it's dropped by 20 to 30%. Now, depending on which side the stock moves, if we have a position up above and the stock does run up, that side might not have dropped by 20 to 30%. But because we already have priced in the potential for it running up to a certain level or down to a certain level, we have a buffer zone. Okay. Now, the next slide I'm going to talk about is all of the last earnings trades since the beginning of this year, starting in early February, all the way to June, which we just started the new earnings season, and we did today. Today was our first earnings trade. We traded UAL. We sold a cash secured put. It looks to be 100% winner come Friday, when we'll be able to just let it expire if it stays where it's at right now. But these are all the trades. A lot of them, as you can just visually see, a lot of them were 100% premium captures. But what I mean by that is this: let's say we sell a strangle, we take in $100, right? If we keep 100% of the premium, that means we keep $100. If we kept 80% of that premium, we kept $80. So when I show you the premium captures, a lot of these were 100%. We let them expire. 90% we closed that. 40% we closed that. 42% we closed that. 32.9% we closed that. Otherwise, we let them expire. We save money on commissions if you have a broker that charges commissions. And that's the best thing. It's just putting the trade on and never really having to even close it. That's what I try to shoot for. But if it makes sense to close it, we close it. Now, some of you might be saying, well, hang on. In 6 months, you did 57 trades. How come so little? Well, the reason is very simple. Because I put each stock through a really high scrutiny before it becomes a trade. I won't just put out trades to put on trades. One thing I pride our trading room on is that we have about a 95+% win rate, and that's no lie, no joke, because every trade goes through, especially the earnings trades, but all trades go through a screening process. Everything has to line up. I have to make sure all the dominoes are lined up. Otherwise, I won't put a trade out, because I'd rather not take a trade than put out a shitty trade that you guys are all going to lose on. So I really, and Frank, right, Frank? I mean, I don't bust out earning alerts. They have to pass the test.
Absolutely. I can tell you that from my experience, and you were slightly off on when I first started trading. I actually did my first trades in 1979.
Oh,
but that's neither here nor there.
Well, you look good for 80 years old, Frank.
I've been around a long time, a real long time. But anyway, there's a zillion different ways to trade, especially with options and all the complexities that options bring in. But from an earnings standpoint, I've not seen anybody who can match your win rate as far as the trades that you've put on.
Thank you, Frank. Appreciate that. Yeah, no, and look, all it takes is 1 week for someone to come in the group and to see this is real. This is not charades. There's no, dangle the carrot, get them in, and then all of a sudden, boom, get blasted with trades. I have given out a few trials, and people are like, "Send me the link. I want to sign up. This is real," because they've been through. There's a lot of fake stuff out there, right? There's a lot of cheap ones out there too. There's a lot of $29.99 discords. But what are you getting? You're getting just a whole bunch of alerts. They don't care if you win or lose. They don't care. They just want to bring in members. 500 guys, $29 a month. Yeah, they're good. They don't really care. I am a higher price, but we get quality trades. You usually can make back your monthly if you join in one trade, maybe two. And as you saw, and this is no lie, Frank's my witness. I'm not paying Frank. Frank has no reason to lie. He's not. You can tell. Look at him. He's not a shafter. He's a grandfather. This is 57 trades, 56 winners. The one trade that didn't close for a winner is ANF, Abercrombie and Fitch. It was an assignment. The stock got obliterated, and I'm still holding it. That's okay. We're selling premium as the stock starts to come back. That's why we only do trades on good quality names. Abercrombie and Fitch is a multi-billion-dollar company. They are profitable. They have a 9 PE, and they're in every state, but I don't know how many countries they're in. But they're all across the world. And their biggest headwind right now is, are they going to be affected by tariffs? But that's the only trade we weren't able to close for a winner. But we will, because we've been selling covered calls. We've been selling cash secured puts, covered what's called a covered strangle, to build up more premium to lower our cost basis. We got a sign at about 110, maybe, I think 110 and 115, Frank.
Somewhere around there, yeah. Yeah.
And with premium we've taken in, we're down to about 105, let's just call it. And the stock's at 80 something. So we're right there. You know, with a stock like that, in about a week, it could be right back to cost. But that's going to happen every now and then. But that's why we only deal with the high quality stocks. All right, let me keep going. Now, this is the account that I use for earnings, and it has shown a 21.8% profit. Percentage gain since the beginning of the year until July 9th. Now, full transparency, not all of this is from earnings, but a good chunk of this is from earnings. So, 21% in the first 6 months is a damn good start to a year, right? If I finish the year with 22%, I'll be happy. But so far, 6 months in, 21.87%. Hey, and welcome, Nigis. I hope I'm saying your name. You really haven't missed any of the meat and potatoes. We're just like, gassing everybody up about me and Frank. We're getting into some details now, though. Here we go. All right. So one of the secrets, here we go, and we talked about it, and it's in the headline title, is implied volatility crush. Now, some people might not know what that really means, and it might sound like what does that mean? So let's get you a good definition from the source is Grok. I trust in Grok. And the Grok defines implied volatility as the measure of the market's expectation of a stock's future price fluctuations derived from the prices of its options. It reflects the anticipated volatility of the stock over the life of that option, expressed as an annualized percentage. So the higher IV indicates greater expected price swings, often driven by upcoming events like earnings, or in the case of United Health. And by the way, I didn't make this up. This is what Grok said. Or in the case of United Healthcare, such news as the CEO resignation or the suspension of the financial outlet. That's what Grok had to say. And that's pretty much better than I could have explained it myself. Frank, anything you want to add to implied volatility definition? Or?
No, not really. I mean, it really addresses the anxiety that surrounds the expectations for stocks going up or down. So the higher the volatility, the higher the price goes typically. And that's where, we gain premium when we sell our options.
Very true. Thank you for that. I agree. Hey, Sharkstero, welcome. What was that you posted? Are you trying to post something? Shark? Anyway, I'm going to keep going. So that's the implied volatility definition by Grok. Thank you, Grok. So the crush, hang on. The crush is, my mouse is back. Okay. The crush is when we have that binary event of the earnings, the announcement comes out, and like I said a little bit earlier on, the market makers juice up the implied volatility, and then once that event is out of the way, the earnings are released, the news is out, there's really nothing else now that can, you could get news the next day or 3 days later, but for all intents and purposes, in that options expiration cycle, meaning the weekly cycle, all the news that's expected has already now been disseminated. So now they're going to contract the IV, the implied volatility. That's what IV is, and it's going to dramatically dwindle down the price of someone who bought calls or someone who bought puts, but not for us. We're going to be enjoying that implied volatility crush because we've sold calls or puts or a combination of them. Okay, so that's where we win because we're sellers. We're the house. We're not the gamblers at the table. We're providing the liquidity for them to come on and get on board. Now we trade to the options because if you do this with stock, you can, you can short stock leading up to an event. You can buy stock leading up to an event. But again, that exposes you to ownership of stock if you're buying it, and it exposes you to short, which means if you got caught short stock versus just caught maybe on a short call, you're going to have to pay the dividend if the dividend is right around the corner and you're short stock. If you're short a call, you don't pay the dividend. If you're short the stock, you have to pay the dividend. So that's important. That's why we do the options instead. And because also we have leverage. Okay, any questions? I see we have 11.
Nothing's been posted so far.
No? Okay, great, Frank, great. Okay, let's keep going. If anyone has questions, though, post them. Okay. Now, the second thing on my checklist is what's called the market maker move. Now, what you're looking at is my Thinkorswim platform, which some of you may use. If not, if you don't have access to something like this, you can maybe go to barchart.com. You can just type in, if you want to go to Google, you can Google, let's say, Netflix market maker expected move, and it should bring you right to that on their website. But I have that access right on my trading platform. It gives me the expected move for this particular week for this stock in the earnings cycle. So it's calling, let's say, for about an $80 move. Okay, so that I take into consideration pretty heavily, because market makers, they're not going to lie about that. This is something that, you know, when they do what they do, this is what gets, when they set the pricing through the Black-Scholes theory model, which I believe has just changed. This is what Thinkorswim sucks out of and displays for us to see. So it isn't like this is like, you know, they're going to tell us 79 and it's really like 29. This is legit. The question is the stock going to really move that much? And that really depends on supply and demand when the news comes out and the stock starts to trade. Okay. Any questions there?
Nope.
Okay. Did I have another slide? Nope. Okay. All right, let's get right into the first example then. So one of the first examples of an earnings trade we did in that list of earnings that I showed you earlier is PLTR, which is one of the darlings of Twitter, one of the darlings of Wall Street. It's been on a major tear. We traded it early in the year, okay, and and what we did was a trade, which it was a pretty cool strategy that I use in certain situations. All right. And this particular strategy called for it. This particular setup called for this strategy, and it worked out. It worked out pretty good. Let's look at the chart. Now, there's a lot going on in this chart. I don't want you to don't let your eyes start wandering. Just look for now with me right now to when we open the trade. And you know what, Frank? Tell me if you can see an arrow right now. Can you see an arrow that I'm pointing with?
No.
Okay, I didn't think so. Yeah, they don't let third party pointing things work. But you could see my mouse, I hope.
I did see it prior to this. I don't see it right now.
Hang on. Now you'll see it. You see it now? No?
No. It was there a minute ago. There it is. There it is.
Good. Okay. So the entrance, we entered the trade. And again, we open earnings trades on the day of the event or the day before. Let's say they're going to have their earnings in the morning. We open up the trade the night before. If they're going to have earnings in the afternoon, we open the trade between 2 and 3 p.m. that same day. Reason being is we want to get the most accurate read on the stock price. We want to get the most accurate read on the implied volatility and the expected move. We don't want to put this on a day or a week or two at a time ahead of time, because things can change as you get closer and closer to the earnings. So that's one of the biggest secrets. There are some people that put on earnings trades for a week away and they bought calls or they bought puts, not knowing that between now and then, a lot can change. You know, the stock can move up in anticipation or the stock can move down. And then they've paid a completely different price than they should have paid than if they would have waited. So we do it at the last possible moment. So we're getting the best prices. That's another key. Okay. Now we open the trade. Now, what kind of trade, you say, Jim? Okay. Well, if you look at what I drew here, we have some things that I went through as I was going through the analysis process. So we had a huge run up from about $40. It doubled. It went to about $85. But before earnings, which came out over here, we had recently had a bull flag happen, and the bull flag pulled back right to a major support zone. Okay. So in my thinking, I said, okay, well, if the stock falls, right, that should hold it up. That should give it some type of support, because this was a hot stock. Remember, this was a darling. So there's a lot of people waiting to get into the stock if it should drop. So that gave me security, knowing that if it does fall, it's probably going to get scooped up right around the same area where the bull flag ended. Okay. Not only that, I had the 50-day moving average right below, another key area that some long buyers would want to buy into it. Okay. We had now we can go over to here, key factors. We had the stock at the all-time high, so we couldn't risk selling naked calls. Now, what I mean by that is this. I like to do a lot of strangles where we sell a put below, we sell a call above. But because Palantir was at previous all-time highs at this time in its trading life, I didn't want to have any upside risk, okay, because that would have put us in a position where potentially you're chasing a stock that you now sold a call, and the stock just keeps running away from you. So I knew I wanted to do a trade that didn't have any type of upper upside exposure. So that means we couldn't do any naked calls or even a call credit spread. Because a call credit spread, while you do have protection, you still can lose the full value of that spread. Okay, we had the strong uptrend, but again at all-time highs. Now the RSI was in the 80s, so that gave me a little bit of pause in the sense of I didn't want to go. Now we very rarely buy calls. Okay, we do them. If we do them, we usually try to finance that with selling puts. But I knew that RSI was in the 80s, so there was a chance for a reaction that would pull back, even if they had good earnings, just because the stock was already overbought. So that was a concern. The recent bull flag is what we talked about, but we knew we had, like I said, strong support at 65. So in my strategy session, I came up with something that we had never actually used before. And we went with what's called an in-the-money call debit spread. Now, what does that mean? So most people typically think of buying. So if let's just say a stock is at $70, you're going to buy a call debit spread from 75 to 80, right? That means you need the price to go between 75 and 80 for you to make money. And preferably you want to go past 80. But what we did was we bought what's called an in-the-money call debit spread. So we bought a 59 by 64. So we bought a 59 and we sold a 64. So that means we had a $5 wide debit spread. But wait, you say, hang on, how can you do that when the stock price was at 82 or 85? You're buying a 59.64. Yeah, because of the fact that the market makers were factoring in the potential that the stock could actually fall, right? This actually had I think we only paid like, so it's a $5 wide. I think we paid, I'm going to show you what we paid in a minute. I think we paid about $4.60. So basically we were buying something that was already fully in the money. It was already basically bought and paid for. All we needed the stock to do was not fall below $64. And if that occurred where it didn't fall below $64, we keep the full $5 that we paid $4.60 something for, but I'm going to see in a second, which means we made $40 on $460 of usage. Now you might say, wait a second, that's potatoes. I don't want to make $40, but wait, if you did 2 contracts, right, you can make $80. Now you say, okay, well, what's $80? Well, $80 on $920 if that's what you used. Pardon me, I'm doing my math quickly. That is a return of 8.7%, 8.6% overnight. Again, you can't make 8.6% in a year in a bank, even in a CD. So these type of trades we can replicate. And if you can make 8.6% even in a week on your money, and again, you don't put all your portfolio into these trades. You don't put $20,000 into this. But if you put $1,000 into a trade like this, you're going to make 8%, 8.6% in this case, which is good money. I don't think anybody that knows anything about finance would not want that. Frank, can you speak on that? 8% in an overnight trade.
8% overnight. You're not going to find that at a bank. That's for sure.
Yeah, hedge funds don't make that kind of money. Now, again, hedge funds are dealing with millions and millions of dollars. So that's why we actually have the ability to make higher percentage gains than hedge funds. There's no doubt about it. Question is do you have the skill set, or do you have the trading, a trading group to do it with? Because we are nimble. We have smaller accounts. Even if you have a $2, $3, $4, $5 million account, you're still much more nimble than a hedge fund with 50 million, 100 million. They can't do these they can do these type of trades, but they don't bother because there's bigger fish to fry for them. So let's get into the trade ticket. Here is what the actual the alert looked like when it went out to the members. It's a new open trade alert earnings, PLTR. It's an in-the-money call debit spread. The date, we're buying the 59.64 call debit spread to be paid. Okay, my memory was right. We paid $460. Okay, max profits $40 per contract, 8.69% at max. And I always recommend, hey, don't go too large, because if the price does fall and we get challenged, then we have to deal with it, and we don't want to mess up anyone's count. So you do 1, 2, 3 contracts depending on your risk tolerance, and this one we just let expire. So we open the position. Come Friday, it self closes. Okay, most brokers will just let this self execute both ends of it, and in your account you'll get credited $500, and you had spent $460. Any questions from anybody at this point? I don't want to leave anybody behind. No trader left behind. Pretty self-explanatory. Frank, did I leave anything out?
No. It works. Right. I can say I can attest to that.
Thank you, Todd. Perfect. Thank you. So a little bit of feedback is great. Okay, next one. Let's keep it in the family, right? PLTR. The beauty of stocks is that once we do a trade, not that you get more, confident, but you can see what worked last time. Maybe you want to do the same trade this time. Maybe you can't do the same trade this time. In this case, we couldn't, but we did something which I love. One of my favorite types of trades. And we were, and a good trader in our group who just posted, Todd. Todd was looking at doing a Jade Lizard on United Health, UAL, United was Airlines.
United Airlines
for earnings today. But you know what? I looked at it and I just thought that it could make the same move as Delta did last week, which was like a 14% move. That would have been a little to the upside too much. So we went with the cash you could put instead. And yeah, in looking back, we could that Jade Lizard would have worked perfectly that Todd was suggesting. But in this case, we're going to talk about PLTR. This is what we went with. We went with the Jade Lizard. Now, again, don't look around too much. Just stick with me for a second because I don't want you to get all confused with what you're looking at. So kind of similar to the last setup with PLTR, we were at all-time highs. Here's where we put the trade on. We were at all-time highs because if you look to the left, this is the all-time high. We swung all the way down, came back up, kind of a similar type of a swing, but a bigger cup, a bigger cup pattern here that it took out. It carved out a bigger valley, if you want to call it, as it was leading up toward earnings. Okay, so some of the key things I looked at. Number one, we had a daily gap just below support. Now here's major support from this most recent swing low to high. This was a major area of support. Now I had to worry a little bit about a gap below because most gaps like to get filled. I believe it's in the 90% range of gaps that do get filled sooner or later. Matter of fact, we did have a gap down and that got filled right away. So 90% of gaps get filled. And I was concerned about that, but I said, you know what? Given the fact that we do have some strong support, and again, it's Palantir. There's a big following for this stock. I don't want to call it a cult, but there's a big following for this that at the time they would have swooped up and saved the day. So I felt, okay, even though there is a gap, that's not a real big worry, but I do look at gaps. RSI was at 73 at the time, okay, which wasn't too bad, but it was pushing the overbought territory. It was on the upper Bollinger Band. Another thing I look at, it was pushing up on that for a while. Okay, so that is usually an indication that it might be overbought for the short term. Okay, and I looked at this as a potential double top. Now, the reason being that it spent so much time getting all the way back up that you had a lot of energy it needed to get all the way back up here. That there could have been a lot of profit taking from these longs that were never able to get out all along here. So there was the potential for this being a double top. So for that reason, I said, you know what? This is a good candidate for a Jade Lizard. That's what the analysis suggested because the market maker move brought it up to about 154, okay? And we were selling above that on the call credit spread. So let me define what a Jade Lizard is. A Jade Lizard is not something I devised. It's not my flashy name. It was actually put together by the Tasty Trade women. I forget their names right now. They're the good trading chicks on Tasty Trade. They've come up with actually the Jade Lizard and what's the other one? We use it all the time. Zebra. So they coined these terms. And what it is it's basically an iron condor, but missing the protective put on the downside. You sell a put, cash secured put, and then you sell a call credit spread. And what you want to do is you want to take in enough premium so that if the stock does rip higher, that you're not going to lose any money because you've taken in more premium than the credit spread width. So let's say we sell a 159, 160 call credit spread, and we sell a cash secured put, and we take in $1.10. Well, if the stock rips up to 500, all we can lose on the upside is $100 because the call credit spread is $1 wide. That's $100, right? But we've taken in 110. So even if the stock goes to 500, we're going to keep 110 minus 100 is $10. So we have no upside risk. So that's the beauty of a Jade Lizard. So in this case, we use the Jade Lizard, okay? And I'll show you that now. Here's what the here's what the alert looked like. Oops, sorry. Here's the Jade Lizard alert. It was in May. We put this out. We sold the $99 cash secured put, and we sold the $149, $150 call credit spread. We took in $1.07, which had no upside risk whatsoever. Okay. The stock opened up. Let me back up. The stock opened up down here. It proceeded to go 4 or 5 days up. But by then, we had expiration week, the end of the week come already, and we just let it expire. So both sides were kept. The premiums, both premiums were kept for the put side. The premiums kept from the call credit side. No need to close them. 100% captures on both. Now, that's two different trades. So I count that as two different trades. We put it on as one, but there are times when I'll have to manage one side and not the other side. So let's just say that it gapped up to 158. We probably would have managed that call side when we could to close it, to take off that risk, right? And then just leave the cash secured put to expire on its own. So sometimes we can manage independently. Sometimes we can just let them expire. If they both expire, that's two different trades because that was two different risks. Now, you can't have them both wrong at the same time, like TJ, my friend, likes to say. I can't be wrong on both sides at the same time, but they are two different trades. So if they both close for profit, I count those as two trades. Yes. How is the max loss 250? On this one? Oh, on yours. Right, on yours, right? Okay, Todd. Yep. Okay. All right. Any questions on this one? Oh, I see, Todd. I got you now. You'll be taking the 135. The max loss was 250. I got you. Thank you for clarifying. Okay. Yeah, I must have read it quickly. I really didn't even catch that. All right. Let's talk about the third trade I want to talk about with you guys. And this was on TEM. It's another darling, I guess you could call it. It was a darling, or it's been under some pressure the last couple of days. Today it had a good day. But on TEM, we used a strangle. So now this is going to be the third example tonight. So we've seen an in-the-money call debit spread. We've seen a Jade Lizard, and now we're going to see a strangle and how it worked out. So here's the setup. And again, just follow me for a second. So we put the trade on right here. Okay, the stock had run up, and then it was coming down, and that's when they had the day before the earnings. Okay, we put the trade on this day right here. And we had a lot going on this particular chart. That's why I brought this one into the example, so you can see it's not all just simple analysis and just go with it. This had a lot going on. So first and foremost, this definitely had a higher high than the previous swing high. Okay, it failed, and it failed on some pretty big volume when it fell back down. Okay, when it fell to this area. Anyway, but it wasn't in an area that it couldn't recover from. So what am I saying? It pulled down to an area of prior support right here. So it was in a good area to make another move from. It could have made a move to the upside just as much as it could have made a move to the downside. We didn't know which way it was going to go. But whenever I have a few things, the RSI was about right in the middle. Well, I'm sorry, the RSI was 73 at the time. From this move up here, RSI was at 73. But it had come down. It had come down from 73 when it got to this point here. So it was below where it was. Overbought wasn't there anymore. It was right above the 50-day moving averages, right over here. So I knew that would catch it, hopefully, if it fell. Now, because this failed pretty miserably, I knew that it would probably have a tough time getting through that area, even if it did move higher. And if you can see, price was at about $70 at the time of the trade. And it would have taken a 20-point move to get it up to that $90 level to get back to stress those all-time highs. So I felt this is the type of setup I love for a strangle. Okay, the Fibonacci 61.8 extension level. If it were to get past this high, and what the Fibonacci levels are areas that I look at that can usually sometimes give you a support zone or an extension zone. Now the 61.8 was higher than where we sold the cash. I'm sorry, hang on. Oh, right. The 61.8 retracement was down here. We sold the cash secured put down here. So we had two things going on. We had support on the chart here. We had the 61.8 Fibonacci level down here to catch it, which is another very strong area. And we had the 50-day moving average. So I felt safe about the cash secured put. So that's one portion, one half of the strangle. Then we had the naked call. Now, some people are very concerned about selling naked calls, and I don't blame them. That's something that I only recommend if you're an experienced trader, or at least you have a good size account in case you have to defend that position. But if I put out a strangle trade, and Frank is one that Frank's a very clever guy. When I put a trade on that's a strangle, if he doesn't feel comfortable with that naked call, he'll just add a protective call on the upside. So he'll turn that into a call credit spread. He's turning it into his own Jade Lizard, because a Jade Lizard is a cash secured put and a call credit spread. So if you want to protect yourself, you can still take this type of trade, right? It'll even lower your buying power usage by buying that protective call. You can still put the trade on. You're going to bring in less premium, but still you're going to have a nice profit if, in fact, it's a winning trade. And then this is how it worked out. The analysis said to go with that strangle, sell the put, sell the call. And so here's what the alert looked like. It was on February 28th. We sold the $50 cash secured put. We sold the 105 naked call. We took in $55 credit. And again, we let this expire. Okay. 100% premium captures. Now, as you saw earlier, the majority of the earnings trades in the past 6 months have been 100% premium captures. So that's really the best it can get. And it's been pretty good. And today was the first earnings trade we took this season. And it looks to be where we'll be able to let it expire in just in 2 days, Friday, for that 100% premium capture. You don't have to, though. If I say and I'll always put out the alert in the morning, hey, I'm going to let this go for Friday, let it expire. If you want to lock it up, take that profit, close that position so you can sleep that night, that's fine. I don't, you have to manage your own money and trade your own account. But I always let you know what I'm doing based on my experience. All right. Now, I know we talked about some of the things I use. In the 3 examples, I illustrated some of the criterion and factors I use, but there's a lot. So it'd be too much in this one setting to go through it all. So I'll just mention them to you. Support and resistance, which is just also supply and demand. Open interest on the options. I take a look at that to see what's going on there. If I see a huge open interest position on calls or puts, I have to take that into consideration. I'd be a fool not to. And I've learned that really does matter sometimes. Gaps in the chart, which we talked about. Short interest. So if a stock has a 30% short interest and they beat earnings, that stock can rip up, who knows, that can actually blow through the market maker move. So there's, short interest is very important. Fibonacci levels, 52-week highs, lows, moving averages, major trend lines, and past earning moves. I take a look, does this stock have the potential to make an outsized move than the market makers are pricing in? So there's a lot that goes into each and every trade. That's why we only get 50, like I said, in the last 6 months, 56, now 57. I don't know how many we're going to have in the next 6 months, but let's just say, and that was actually on the low end. Previous to this, I believe it was like 65. So this was a little bit on the lower end. But even if we have the same amount this season, okay, so let's call it 55 trades, okay, let's just say, again, I'm not trying to promise any numbers here, but let's just say, you make 55 trades, and if we let's lowball things for a second. If you make $50 a trade, that's lowballing it. That should make you about $3,000, okay, in 6 months, just as trading earnings, one contract. You want to do more contracts? That's up to you. Okay. Let's get to questions. Any questions?
Nothing showing.
All right. So what I want to share with you guys now is some of the testimonials from some of the traders that are in my place. Now, we have a nice, small, close-knit trading group, and not everyone likes to trade earnings, but that's fine. But these are some of the traders that have shared their sentiments about trading in the group. They've all given 5 stars. They would just this guy says he's very happy, nice person, blah blah. He would recommend the services. This person says excellent community. We have great. Frank's one of the like I said, one of the senior members. We have great traders that are always willing to help or chime in if you have a question on your own stock or chart. So it's really a good group. This guy says he learns a lot. Trades for all levels of experience. I'm very reachable. That's true. I'm reachable almost 24 hours a day, and I guide you through the tough orders. We've been through a couple tough trades. Listen, I'd be lying if I said we never had a tough trade, and we have had some losers. In this earnings season, like this past one, we didn't have any losers though. This person's been with us 5 months. He's still positive. He's still positive, meaning making money. He said, I work hard to bring you trades, 90+% win rate at the time. This person says he's tried experiencing different trade alert services for the years. This is by far the best. So I'm not saying these things. Frank is not saying these things, although Frank can, Frank can speak for his experience if he'd like. But this is all by some of the, the traders that are in the group or did when they posted this, these reviews.
I have to tell you that from my perspective, one of the biggest advantages is the community itself. There are several active traders in the group who are posting their trades day in and day out. And quite honestly, I get a lot of my ideas from just seeing the trades that they're posting. I may not use the same trade or the same options strategy that they're using, but I get an opportunity to see what other traders are doing real time during the day. And it's just, to me, it's an added benefit, a huge added benefit to the group.
Excellent. Good point.
It's also important that, especially for newer traders who don't have a lot of experience, to gain insight from the other community members on the rationale behind their trades. Why are they doing what they're doing? What causes them to use a particular strategy over another? And I find it often interesting to see how different traders trade.
I agree. And that's a good point. I didn't even think to mention that. So I put out, and I'll show you in a minute how many earnings trades you can expect, let's say on a weekly basis, but I also provide what I call bonus trades. So if you join the group, let's say you're going to join the earnings service group, you're going to get X number of earnings trades. Again, they have to pass the test. So let's say you get up to 10 trades in a week. You might have 3, you might have 10. Depends. If it's busy and they pass the test, we're going to have a lot of earnings trades. On top of that, I give what's called bonus trades, so that in the slower times, you're not just sitting out there, twiddling your thumbs thinking, oh, I don't have any trades now. I'm providing trades that I also would be putting out to the other members who they're in the higher level group. So you're going to get some of the same trades that I give to them, but I'm sharing them with you. So you're going to get what's called bonus trades. But so there's always extra trades on top of the earnings trades from me. And then what Frank was saying is now Frank's a very heavy poster. He posts a lot of his personal trades, and they've all been winners. I don't know. I won't speak for Frank's profit levels, but he's made over 5 figures in the last week on some of his own trades. And he posts them. Now, the other traders are posting their trades too. Todd, he's a member of our group. He's in the group right now watching this with us. Thank you for coming tonight, Todd. Todd posts some of his trades as well, winning trades. Arthur, I don't know if Arthur's here tonight. Arthur's another one of our group. Dan, Matt, but these guys are all posting their trades winners. Like you'd think that these guys have inside information. I mean, really, if they're winning trades. So you're not just getting mine, you're getting the group, like Frank said. And if you have a question about it, you can say, hey, what are you seeing in that trade, Frank? What are you seeing in that trade, Todd? And, hey, I see this pattern. I just think it's going to get to this level. And it's a nice community. It really is. So
quite honestly, I think I've gotten as much value from the questions I ask you and the kind of double check into my rationale or reasoning that when I come back to you, which I probably do more often than you're a busy guy, and I know that. But to me, it's just you're kind of my sounding board to make sure that I'm not kind of falling off the deep end and doing something that's going to put me in a bad position.
Well, thank you for that. And you know what? While I have a moment before I get into the offer for everyone, I'm going to I'm just going to bring. If he's free, I'm going to see if he's free, would like to come on and give his testimonial, because he's an active guy and one of our good traders as well. Arthur, I'm going to send you a link if you want. Quickly jump on. I don't want this to go too much longer. People have been really patient with this presentation. But any other questions before? Thank you, Todd. Yeah, we do it's only quality setups. We don't listen. We don't just throw a whole bunch of trades at the wall and hope that it sticks. Okay, can't make it, Arthur. No problem. So with that, let's get into what I'd like to show, what I'm offering tonight. If you want to be part of us, jump in, start trading with us first thing tomorrow, let's say. I'm going to make it available to you. It's a very, very good deal for what you're getting. And look, I'm not trying to sell you something. If you come in and you feel that, hey, this is not what I was thinking, I was expecting, you don't have to stick around. You can leave after the first month because there's no contract. But I think for the value I'm going to offer, it's a pretty good deal. I mean, one trade, you should be able to make your whole month and then some. Two trades, you make at least double that. So what you're going to get if you join, and this is the earnings trade package. If you say, I don't want this, I want to get to the top level package, you can do that too. The rate's a little different, but this is what you can get if you just want to jump in on what I've been explaining tonight. You get up to 10 trades, earning trades a week. Okay, so that could be up to 40 a month. Again, it depends. Some weeks it's going to be 2, some weeks it's going to be 5, 8, depends. You're going to get 2 to 4 bonus trades a week, so I'm going to keep you busy. There's a free technical analysis channel there for learning. I post things in there. Todd, Frank, Arthur, Dan, these guys are all posting technical analysis stuff they're looking at. If you have questions, let's say you're looking at a chart of your own. You're looking at a chart, you're thinking about a trade, you want to get some pros' eyes on it, put the request in there, and I'll usually get it right up for you in a day or so. Give you my thoughts with some whole big technical analysis on it. You get the live trading chat where you can ask questions about all kinds of stuff, your trades, our trades. You can ask how to do a trade. What is a trade lizard? Explain the trade, whatever. Every week I do a performance tracker so you can see what trades we took and how they worked out. And I haven't started yet, but I do plan on going with some Zoom meetups, maybe once every 2 months or something, whenever people start, asking for it, where we just get together, we just talk about, trading and stuff. With no real topic, just, sort of like a fireside chit chat. But regular price for this is $79, okay, which is still a good deal. But because of the webinar tonight, if you'd like to join, I'm giving it out for $59 a month. Again, one trade should pay for the whole month. And that's with one contract. Let's say you do 2 contracts. Again, the sky's the limit on how you want to trade. If you want to join for the year and pay for it up front, it's $5.99. Really, it's up to you. I think it's a great deal. Frank, from your perspective, you've seen a lot of different places out there. I mean, pricing, I believe it's right on the money. What do you think?
I think that $59 is a steal, personally. I mean, like I said, just the having the ability to get a second opinion, particularly when I'm borderline on a trade and I can't make up my mind for sure whether I want to go for it or not. It always helps because you seem to be there every time I need you, and you've given me some extremely valuable information, and I've learned a lot from you as well.
I appreciate that. And that is true. It's not just about my trades. Are they going to be winners or losers? If you have something you have a question on, your own trades, that's what you're paying for. You're paying for me to be there and I get you an answer as fast as I can. I'm usually right there quickly. So yeah, you get access to, again, I'm trading 27 years, guys. I'm not saying I'm the best, but I have seen a lot and Frank's seen a lot. So you've got, and you don't have to be trading this long, let's say, to be good, right? I'm just saying that you do have a lot of experience. We've seen it all. We've seen crashes. There are some traders, some of the younger traders, I'm not saying who, I'm just saying there's a lot of younger traders, like sub 20 years, 30, 25-year-old, just they've never really seen a tough market. They've never seen it because they're trading 4 or 5 years. And we've only had in the last 4 or 5 years, really a bull market. Okay, we had COVID, yeah. 2022 was a little bit of a bearish tone, but no crashes, nothing where you lost, everything. We had the tariff tantrum. Yeah, that was pretty harsh on some trading accounts. But same thing, still nothing like we've seen back in the late 80s with Frank saw, the late 90s when I saw, and also when we changed to decimalization. I forgot to say that. I learned to trade on fractions in the 90s, and then we switched in 2001 to decimals. So I actually had to relearn how to trade. So I've learned how to trade twice. Frank sat through a crash. He watched it in horror as he watched his portfolio dwindle. And so, yeah, I mean, it's crazy. I just posted a link for anyone that wants to get onto that $59 plan. And again, it's a special for now. So please don't come and ask for this in a week or 2 or a month. Say, I missed it. I wanted to. It's $59 right now, tonight. Otherwise, it's $79. It's a killer deal. You're not getting bamboozled, right? We're real traders, the real results. I mean, Todd is in our group. Arthur is in our group. These guys are not sitting here getting paid, and they're great traders. They're coming on their own free time just to sit and hang out, and maybe they can learn something about some of my trading the back end stuff. But yeah, I mean, any questions on the package? Any questions about the membership? Any questions on what you learned tonight on some of the setups?
I don't see anything.
I'm wondering if anybody's having difficulty accessing though, because there's 11 people watching, and really the only ones that have been talking have been the one, Arthur, Todd, Shark. Shark mentioned talked a little bit earlier. That's about it. So I'll leave this up for just another couple of minutes if anyone has any last minute questions. But again, these were all real trades. They were all winning trades. They were all based off of, again, earnings event. I showed you the strategies that we used, the alert, how it looks when we put the alert out. And in these instances, we didn't have to close any of these trades. Now, if we do close a trade, just like you saw the alert that goes out for the entry, you'll get the alert for the exit. And what I sold and how I closed it, what I got for it. That's another thing. So let me back up a second. So here's like with the trade ticket, right? I'm sorry, this is the alert, but at the bottom is the trade ticket. Now, this is something I can't manufacture. This is something that is, once you get executed by your broker and filled, that this is what it looks like. So you can see that I filled at $55, okay? And you can see that I posted that we, received $55. So everything is legit. And there's no, like I said, there's no funny business. And all you have to do is come in the room and take a trade or two and you'll see. I know, and listen, I know there are some traders that do come into rooms and they are very skeptical, and they should be, because there's a lot of companies, discords out there that are unscrupulous, and they'll promise you this, or they'll just tell you anything just to get you in. But we're offering you a really good, legitimate setup and service, and we have, like I said, a tight community. We're not trying to grow this to be 1,000 members. We want a nice tight room, but we want to bring in a few here and there. That's about it. So if there's no questions, thank you for attending. If you think of any questions, you can always post them into the comment section in I guess on the YouTube, or you can hit me up on Twitter. Use the options on Twitter. You can always DM me. If you can't DM me, just post at me and I'll get right back to you. Thank you, Todd. I appreciate that. Yeah, Todd's a guy who Todd came in. I don't know if he was skeptical or not, but once he came in and he made some trades with us, he's gung ho now. He's one of the very active traders and posting, and he asks a lot of questions, which is good. Todd, I can tell, is learning a lot, and he's a pleasure to have on board. Yep, you too, Todd. Thank you for showing up. Thank you for adding some bits and pieces and wisdom and your experience. See you in the morning, man. All right, everybody. Thanks for coming. Thank you, Frank. I appreciate you keeping an eye out on the comments, helping out with some areas I may have not covered or overlooked. But thanks for adding all those very valuable points. You're right. When someone has a trade they're thinking about doing, it's good to just, hey, before they do that trade, bounce it off the other guys and see what they think. And you can get another 10, 15 sets of eyes on something that you've been looking at before you have to jump on that and make a big trade and make a mistake.
I'll tell you, even something as small as earnings coming up, placing an options trade, you definitely want to know where, when the earnings are coming. And it's one of the things that in my old age, I tend to forget to look at. So for that fact alone, being able to have you come back to me and say, hey, wait a minute, did you consider that earnings are coming up next week? That's stopped me a couple of times now from taking a trade that I otherwise would have taken.
Yeah, no, I totally agree. It's always, and it's like, even I was thinking about closing one of the trades recently, and I put it out to you guys because I wasn't really sure. I'm like, am I overthinking this? And I was really tired. I said, let me just run this by everybody else. And a few people said, no, leave it on. Let's leave it on one more day and let's see. So it goes both ways. All right, everybody. Thanks for coming. Thanks for watching. Thanks for attending again. And if you have any questions, like I said, hit me up in the comments, YouTube or on Twitter. And thank you, Frank. And I'm going to end the stream now. And everyone have a good night.
Good night, everybody.